Thank you. Next, I would like to invite Michael Bigney, Administrator and Co-owner of Home Health and Hospice Care and Nursing Placement and President of the Board of Directors of the Rhode Island Partnership for Home Care. Welcome, Mr. Bigney.
Good afternoon. My name is Michael Bigney. I'm a CPA, owner of Nursing Placement, a home care and hospice agency, employing Rhode Islanders for 45 years, and president of the Rhode Island Partnership for Home Care. I'm here today to speak to you about the unfairness of taxing PPP loan proceeds over $150,000. My company was considered an essential employer during the pandemic, so we worked every day during the last year and a half. We experienced over 150 cases of COVID between patients, office staff, and clinicians. During this time, the PPP funds allowed us to pay our staff a higher hourly wage, payroll pay if you will, which was necessary due to the high risk of working with COVID patients and the potential of contracting the disease. In order to keep servicing our patients, we needed to pay our employees a premium hourly wage, or they may have chosen to collect unemployment. Furthermore, to protect our caregivers, we were forced to pay exorbitant rates for PPE supplies. For example, pre-COVID, we would pay $18.99 for a case of gloves. During COVID, that same case of gloves cost $189.99. Obviously a significant increase. These higher hourly wages and increased supply costs were only affordable through the PPP loans. Unfortunately, later in the year, aid to businesses from the CARES Act, which came much later by the then Governor Raimondo, was too little, too late. The PPP loans allowed us to use these funds for limited expenses to care for our patients. State corporate income taxes were not one of these acceptable expenses. Allowing the state to tax companies by changing the rules after most of us have spent all their PPP funds on their employees and benefits is unfair. I've heard it said that companies have a profit from PPP loans over $150,000. I couldn't disagree more. For example, my company sells services, not products, so I would naturally have a higher payroll and a higher PPP loan. I would argue that I have a loss from the PPP loans because I've paid higher wages, retirement contributions, payroll taxes, and workmen's compensation premiums on those wages. The PPP loans do not take into consideration all the employer-related expenses that an employer is responsible for, and to point out the obvious, the state has already financially benefited from PPP loans through employers' increased payroll tax payments. Furthermore, looking toward 2022, I already know my unemployment tax will be increasing due to all the unemployment claims being paid, both legitimate and illegitimate. Massachusetts has already increased their solvency rate by 1,500% compared to last year because their fund is insolvent. Workers' compensation rates will most likely increase due to COVID claims that were paid during last year. And I've already been told by my health insurance carrier that my corporate health insurance premiums will be increasing 10.8%. In closing, at a time when my company's employee count is down 30%, I need every last dollar I can get to retain and recruit employees to care for our elderly. The state has a very large surplus, and I ask why, in this very fragile business climate that we currently operate in, would the state need to tax PPP funds? Rhode Island companies are struggling. They can't hire workers, pay rates are climbing without adequate reimbursement increases, and all employee benefits are increasing as well. Thank you.